Brent crude oil is currently hovering around $62 per barrel, reflecting a year-over-year decline of approximately 16% and an 8% drop over the past month. Now coming to the supply and inventory trends, US inventory build API reported a 7.36 million barrel US crude stock increase for the week ending October 10, the third consecutive weekly build against expectations of a 136,000 barrel draw. US crude inventories at 420.3 million barrels early October, 4% below the 5-year average, but not yet critical but signaling potential oversupply risks if build persist. OPEC plus policies output cuts extend through 2025 to stabilize prices, but non-OPEC supply growth like US and Canada make cap gains. And India's shift plan to phase out Russian crude imports and diversify sourcing could tighten global markets in 6 to 12 months, with Saudi Arabia UAE likely to increase exports. Now coming to the demand outlook, IEA projects global oil demand growth of 0.9 to 1.2 million barrels per day in 2026, down from 1.7 million barrels per day in 2024. China's impact on economic and slowdown and shift to renewable energy may reduce oil demand. And emerging markets like India, Southeast Asia may offset declines, supporting Brent prices in the $60 to $70 range over midterm. Now coming to the technical outlook, the linear regression trend channel is sloping downwards, reflecting sustained bearish momentum. Both short-term 50-day as well as the long-term 200-day moving averages are trending lower, reinforcing this negative outlook. With the key support zone at 65-66 now broken, the short-term sentiment remains bearish. The next significant support area is projected around 58.50 to 59.50. The mid to long-term outlook for Brent crude oil is cautiously bearish, with prices likely to hover between $55 to $75 per barrel in the next 1 to 3 years. An ample non-OPEC supply and India's shift away from Russian oil and OPEC plus discipline could provide some support, but significant upside would require supply disruptions or stronger than expected global growth. Investors should monitor IEA inventory trends and OPEC plus decisions and geopolitical developments for key inflection points. That's all for this video. Thank you for watching.